ITC gave a surprise move yesterday and finally brought cheer to a lot of investors out there. It was a long pending move and the stock closed with a gains of around 6.6% at 240 rupees per share levels. But when we see in the past 1 month, then the stock is just up 10%, and when Nifty is up around 10k points from the COVID lows, ITC is just up 31%. So a lot of underperformance was there when compared to Nifty, and this undervaluation of the stock is also what we keep talking about. But now finally it gets moving. Not only this, it has not only underperformed Nifty but also FMCG Index as well. When in the past 1 year, Nifty FMCG Index has gained 34%, ITC is just up 29%. And not only that, when in the past 3 years, FMCG Index is up 35%, ITC has actually declined 24%. So a lot of underperformance was there. And we keep talking about the undervaluation of the company when compared to the other FMCG pairs. If we see HUL's FY22 P multiple, that's at 62 levels, then ITC is at 17 times. When HUL is being valued at 52x for FY23 P multiple, ITC's multiple is at 15 times. So a lot of undervaluation was there, not only when compared to HUL, the other FMCG majors as well, like Marico, Emami, Nestle, GCPL. You will see that the ITC is almost less, like 50% less than what the other FMCG companies are being valued at. So now it finally gets moving, and now there are a lot of reasons that the analysts are coming up with why they are seeing such kind of a rally. Firstly is, of course, the increasing consumption of the cigarettes on the unlocking that's happening around because in the COVID times, because of the lungs getting affected, and multiple reasons were playing out there. And along with the cigarette business, we are seeing that the hotel occupancies are improving. The FMCG business, that's also improving for the company, and the current valuations, like I highlighted, markets have been totally ignoring that. That's what the analysts believe. Post this, brokerage firm CLSA has come up with their report where they have maintained their buy rating on the stock with a target price of 265 rupees per share. That's still 10% upside that they are targeting on the stock after the stellar move that was seen in the stock yesterday. CLSA feels that the cash cow business of the company, that's the cigarette business, is undergoing a recovery, and going forward they expect the volumes to recover as well in this business and the margins expansions to be seen in the cigarette business, which will eventually help the overall margins of the company to improve further. They see the EBIT CAGR of around 8% over FY21 and 24. And talking about the overhang of the tax increase, they feel that it is unlikely to be seen in the upcoming GST Council meeting, and that's another trigger for the company and the stock to keep moving. And valuation, just like I highlighted, CLSA 2 feels that remains compelling, and that's because they maintain their buy rating on the stock on the faster business recovery, and that will be interesting to watch out for how ITC moves ahead.